All right. Thank you, everyone, for joining us. We are just getting started. Wait for a few more people. All right. This looks good. I've got the whole setup. I'm so glad you could join us. So glad you could join us. Let me speak into the mic. And here we go. Hey, everyone. I'm Mitch Goldberg. Welcome to the Post Market Show, 4:30 Monday through Thursday. We talk about investing, the latest news, the stock market, personal finance. We talk about crypto. We talk about planning. We talk about it all. We talk about shopping. We talk about it all right here on Be the Boss of Your Money because I really want you to be the boss of your money. And I've got 30 plus years as an investment professional, just so much experience to share with you. And it would be a shame if I just didn't just belt it all out. Plus, there's always something new happening in the market of the world in finance, the world of finance and politics and all that good stuff. So let's get into it. Did we survive the day the Bitcoin ETF came out? Yeah, I think we survived. Okay. Hey, did you get into that? Is that something you jumped into, the Bitcoin futures ETF? Let me know in the comments if that's something that you got into, if you're interested in that kind of thing. I spoke about that yesterday for the whole show is dedicated to the Bitcoin futures ETF. So if you want to jump on yesterday's live, it's still up on LinkedIn, on Facebook, and of course, YouTube. And by the way, while you're watching this, if you are the kind of person who subscribes to YouTube channels, go ahead, give mine a shot. It's called, the name of my channel is Client First Strategy. When you go on, you'll see the banner, Mitch Goldberg, host of Be the Boss of Your Money live stream, and you'll definitely know where you are once you're there. But if you do that kind of thing, if you subscribe, let me know. Anyway, let's roll a quick introduction, and then we've got a good show. We're going to go through a quick update, and we're going to talk about, you know, what could push the market up to new highs and keep it going through the end of the year. Because right now, it is extraordinarily bullish. There's no guarantees that we stay bullish, but just, up 900 points last Thursday and Friday and continuing on the Dow and continuing into this week. Earnings have been pretty good. It seems all of the, we've gone from sadness to euphoria, as Billy Joel would say. All of that sadness and worry and everything from the last couple of weeks, from let's say beginning of September until 2 weeks ago, all that negativity, it just seems like it all just disappeared. We're not worried about a China slowdown. We're not worried about the taper anymore. Um, there's still worries, and that's a good thing because the market climbs all of worry. So here we go, and we're going to talk about all this good stuff. Get your questions ready in the comments. Here we go. And we're back. If you're just joining me now, I'm Mitch Goldberg. You're watching my live stream, Be the Boss of Your Money. We talk about personal finance, investing, and so many other things, opinion, commentary. I see some of you out there joining us. Thank you very much. Josh, thank you very much. Victor, I just want to put up Victor's question real quick. Can you explain what Roth IRAs are, please? Greetings. Greetings to you, sir, and thank you so much for joining me. I'm going to get into a Roth, what that is. Just give me a moment. I just want to make sure we get through the quick update. But your question is important. And to tell you the truth, I hate when I say to tell you the truth, because I'm always telling the truth, but I really feel, to tell you how I feel, Victor, I like personal finance questions like that. I think those are the most important ones because those are the ones that help you get ahead, not necessarily, how Bitcoin or the S&P 500 did today. The S&P 500, by the way, is an index. And did you know that you cannot invest directly into an index? You could invest in a security like an index fund that tracks or mimics an index, but you actually can't invest directly into the index. Now, it's a distinction, and I have to point that out. So just want to make sure I'm make sure I'm keeping it kosher. And let's take a look at how the market did today. Let's just jump over, pop myself up in the corner. Dow had a good day. Yesterday was off like 35 points, which is nothing. Like 35 points is ungats for the market. This isn't even cable. This is like, web-based internet. I could say that, right? Probably most of you have no idea what I just said. So that's probably better that way. Unless you're from New York, then you definitely know what I said. But let's go on. Rita, if you're watching this, you can always ask me privately what that means. Okay, here we go. So the Dow up, it was off 35 points yesterday, but up almost 200 points today after Thursday and Friday's gains last week of almost 900 points. Continues. So now we've got just about an 1,100 point gain since the middle of last week on the Dow. And back obviously over 35,000. NASDAQ up 0.71%, respectable day. S&P up 0.74%. We are like this close. We're like this close to record highs across the board for those three major averages. Gold was up a drop at let's see. Let me move my cursor. See, I made the cursor green. Can you like that? I made the cursor a little bigger and green so you could see where I'm going with it. So 1770 up $4, up 0.25%. Oil continues to bubble higher. Is that a good way to say it? Oil continues to float higher. I don't know. If it went down, I would say it was down a slippery slope. But the 10-year Treasury at 1.63%. That's a pretty significant thing, finishing solidly into the 1.6s. That's actually pretty significant. The VIX, wow, the VIX has gone even lower, down to 15.7. I always talk about that. The VIX, when it got under 20, I said we've got a rally coming our way. VIX goes over 20. We've got a down market coming our way. And it's worked consistently. So kudos to the VIX. It's telling us a lot. And now with only about less than 2.5 months left in this year, could we continue to rally with the VIX as low as it is? I think so. But again, it's opinion. No guarantees. And just so you know, I don't make guarantees here, except for death and taxes. Yeah. That's about it. Okay. So the S&P, the Russell 2000, that's Rust 2K, closed up 8, up 0.36%, respectable day. So small caps had a good day. And let's take a look at some of the big movers. Oh, by the way, Netflix, after the close, came out with numbers, and they were pretty good. Subscribership growth was okay. They're constantly coming out with content. Some of it's even good. The Squid Games, whatever, has been the hottest thing, and it cost them like next to nothing to make, and it's worth almost $1 billion according to Netflix. Nice investment. Doesn't happen every day, but nonetheless, if you see the 52-week high for Netflix is 646, and we are just about there. So Netflix going through new highs. I tell you, this has been pretty bullish, and I'm going to just say that a few weeks ago when crypto went from like 60,000 down to like I don't know, like 33,000, and small caps started to go down and meme stocks went down. And what I said to you is those three spaces, crypto, small cap, meme. I'm sorry about the little glitches. There's like keeps doing that. I don't know why. It's really not a whole hell of a lot that I can do about it. So sorry about that. But I think if I turn my equipment on like a half hour before the show, it goes away. So something electronic. I can't figure out what it is. I even bought a new computer and still had the same problem. I got a nice new computer, though. It is hot, and I'm on a curved screen. I have a LG 38-inch curved screen, and this thing is just awesome. So I like my tech toys. So, yeah, it was saying, though, between crypto, meme stocks, and small cap, those I look at as a function of or a relationship to energy. When they go up, it means, in my opinion, that there's more energy in the market, that investors are accumulating stocks. And when these go up, people say, "Oh, it's a bad thing if they go up. It means a speculative froth." Listen, if you're the kind of investor that every single time the market goes up, uh, it's a speculative froth, why even bother? Now, yes, I realize it's been going up for years now, notwithstanding the pandemic bear market, but we've certainly recovered well from that. But just because the market goes up or something that you think is speculative goes up doesn't mean we're in a speculative bubble. I think that one of the biggest lessons from crypto is that just because it doesn't jive with your point of view doesn't mean it can't work. Oh, I don't like it. I don't believe in it. It's funny money. It's fake. It's make pretend. I think the expression "the proof is in the pudding." The price is in the pudding. So just because something doesn't go with your particular view of the world doesn't mean that something can't work. All right. And don't get into like conspiracy theory bullshit with me either. Okay. I'm not getting into that. I'm just talking about, I'm not talking about alternative facts. Okay. What I'm talking about is things like crypto, small caps, and meme stocks. Now, I, for one, believe that meme stocks are way overvalued and insane what's going on with these companies. I don't, that's my own opinion, but someone else could think they go higher. There's market mechanics, there's enthusiasm for them. Fine. Crypto, it remains to be seen what crypto really becomes, what it means. It remains to be seen if any of the current cryptos, from Litecoin to Ethereum to Bitcoin and all the others out there, it remains to be seen that if these are going to be the actual winners in the crypto space in 2 to 5 years from now. Just like a lot of the internet stocks of 1999, 98, 2000, they disappeared. Lycos, Excite, At Home, eSpire. I mean, so many just disappeared. Okay. And then, Google came along, and Google didn't even come along. I think, what was it, 2003 is when it went public. So right now we're looking at the first wave of crypto. Uh, I'm looking at the next wave. If you recall, Yahoo and AOL were like the two kings of the internet. Those were like the first stocks you would buy if you wanted internet exposure. And, where are they today? I mean, I don't even know where AOL is. I think Verizon took a shot and overpaid for it. Verizon was like the last company in a long line of companies that purchased AOL. And I don't know where Yahoo is either. I don't even know who owns it or what the assets are worth. But who uses Yahoo? I was talking to a friend of mine who still uses an Earthlink email. I'm like, oh, wow, Earthlink. Haven't heard that one for like 20 something years. Earthlink? Wow. Okay. So let's get back to the screen. Okay. So anyway, Netflix looks like it's about to break out to new highs, but had a decent earnings number. And let's take a look. Did we survive the Bitcoin ETF? Here it is. I think it came out at 40. And traded in the 42s. As high as 42.15 right here. All right. It closed. Where you close, you son of a gun, at 41.92. Which is not too far. Probably most of you who bought this are doing okay, but it wasn't like anything explosive. It shouldn't be explosive. It wasn't like a company IPO that could go from 40 to 80. It's supposed to track Bitcoin. So this is up 4.85% from its offering price. Let's see how Bitcoin did today. And Bitcoin was up 4.74%. Right? 4.74%. And this is up 4.85%. So pretty close, if that's what we're going by first day trading. I gave you my opinion on what the deal is with the Bitcoin futures ETF. Again, I refuse to call this the Bitcoin ETF or the Bitcoin strategy ETF like it says up here. It's the Bitcoin futures ETF. And I think calling it by any other name is not really honest marketing. Okay. So I just want to point that out. We went through that one already. We went through this one. Let's take a look at our winners and losers for the day. Okay. So we always take a look at the Feng M stocks. By the way, Bill, you are, let me see, Bill is out there. Bill made it again. Thank you, sir. And Victor, I did not forget about you. Okay. Let's take a look at the Fang M stocks. So Apple was up again. Amazon was off a drop after a great day yesterday. Facebook is up after a decent couple of days. It's still a ways to go to its high, but it's recovered nicely, and I think people are feeling fine about Facebook. Google was up. Microsoft hit a new all-time high today of 309, and Nvidia continues to march higher. When these stocks are moving in unison in any one direction, up or down, I guess it can only be in two directions, up or down, as opposed to just any one direction. One Direction. My daughter used to like that band, that 1D, but it was good stuff. I thought it was good, wholesome boy band stuff. Was it? Were they? Yeah, it was good. So I digress. I digress a lot. Have you noticed? I do. I'm all over. So these stocks, when these stocks move, they pull the whole market with them, and that's just the gravitational force of these companies is so big, they dominate the market, just dominate the market. And let's now take a look at let's take a look at what some of the movers were. Screen might be a little big. I blew up the screen. Here we go. Let's take a look at the market movers, okay, in the S&P. Penn National Gaming up, Dominion, Enphase, Edwards Life Science. Edwards Life Science has just been a beast of a stock. Deere has been a beast of a stock. I think that's a new high, 343. But this is a pretty eclectic group of stocks that climbed today. But definitely there's industrial, there's financials like PNC, there's tech like Crown Castle, healthcare like Edwards Life Sciences. I guess Penn National, you'd call that maybe consumer discretionary. Healthcare like Zimmer Biomet. What led the way down? Ulta Beauty, Western Union, Carnival is down, Marriott. A lot of the reopening, back to work, back to living stocks. Airlines are down, Hilton Hotels was down, Expedia was down. So maybe it just wasn't such a great day for that group of stocks. And the last thing I want to take a look at is let's get back to my watch list. The watch list. I have got so many watch lists going. And if that spins for like another couple of seconds, I might just skip the watch list for now. Okay, I'll get back to the watch list anyway. So Bill, great to see you, man. Thank you so much for joining me. Victor, I want to answer your question. Can you explain what Roth IRAs are, please? Greetings. Okay, Roth IRA. I'm a big fan of Roth IRAs. There's two kinds of IRAs. There's a traditional IRA and a Roth IRA. With a traditional, we always explain, I don't know if you ever noticed this, but whenever financial advisors talk about the two kinds of IRAs, we always talk about the traditional first, and then we get into the Roth IRA. Maybe it's just because the traditional has been around for so long, and the Roth IRA, even though it's been around a long time, it just wasn't what we cut our teeth on, right? When I got into the biz in 1990, a maximum contribution to a traditional IRA was $2,000, and I had never even heard of a 401k. Like, nobody knew what a 401k was, and obviously everybody knows what it is today. But so with a traditional IRA, you put money into it. $6,000 is the limit. An extra $1,000 for people over 50. And if you're not in a 401k plan, there's no income limit to how much you could put. There's no income limit that disallows you from putting money into an IRA. And when you put the money, let's say you put $6,000 into it, you get a tax deduction for $6,000. So $6,000 comes off the top. So if you made $150,000 and you get taxed on $150,000, You take that $6,000 IRA contribution off the top line, and you go from 150,000 to 144,000, and now you're taxed on 140,000, excuse me, of income instead of 150,000. 144,000. I'm a little tired today. So if you're getting taxed on $6,000 less, presumably the taxes that you would have saved on paying $150,000 income tax is worth something to you. It's a tax deduction. So it would bring your income down to 144,000. So by not paying taxes on that top $6,000 of income, maybe you saved $2,000 or something to that effect in taxes. All right. And then the money in the IRA grows. So it's an account, but it grows tax deferred. And tax deferred simply means it's not taxed while the money is in the IRA. It does get taxed when you take money out of the IRA. And the tax that you pay when you take the money out of the IRA is whatever your income tax bracket is at that time. It's not a capital gains tax, it's income tax. So for a lot of you, it's going to be the income tax is going to be higher than the capital gains tax. But while the money does grow, let's say you put it into a mutual fund or an exchange traded fund or a stock that pays a dividend, you won't get taxed on any dividends. You could reinvest and you just won't pay any taxes on the money while the money is in the account. So the money is deferred until you take it out. So one day you take the money out of the IRA, then you pay the taxes. So the money is deferred. That's what it's called, tax deferred, until you take the money out of the IRA. And why would you do that? For living expenses, or because you're over 72, you have to take a required minimum distribution. You have to take money out of the account when you turn 72 out of an IRA. It could come out to, let's say, rule of thumb, about 4% of the value of the account, okay, of its previous the previous year-end close, okay? And then you have a Roth IRA. So when you put money into the Roth IRA, you do not get the deduction. So if you put $6,000 into the Roth IRA, if your income is $150,000, and you decide, let's say your income is $140,000, okay, and you put $6,000 into it, and you don't get to say, well, instead of making 140 and getting taxed on income of 140,000, you say, well, now I'm only going to get taxed on 134,000. Doesn't work like that. You're still getting taxed in the full 140,000, which is about the limit that you could make to put money into a Roth IRA as an individual. That's why I'm using that number. But the money in the account grows not just tax deferred, it grows tax free. So one day when you take the money out, it's free and clear. There are no taxes. You take the money out, it's all yours. You don't have to pay taxes on it. And you never have to take it out if you don't want to. There's no required minimum distribution when you turn 72. But for me, which one do I like better? It always depends on the circumstance, Victor. But if I had to choose right now, I like the Roth better, because presumably you'll get a small tax deduction for a traditional IRA, but the amount that you'll save in taxes when the Roth IRA grows over decades will be worth a lot more to you than the little deduction you got for the $6,000 that you put into the traditional IRA. I hope that helps. Send me a DM and we'll talk if you need, to talk about this a little bit more to get your head around it. Okay. So let's talk about what could make the market go up for the next couple of months. It's only 2.5 months, and there are a few things that I see. Okay. Some of the things that I see happening right now are earnings have been rock solid. Now, we haven't finished the earnings season. We have more than halfway to go. But so far, technology companies, which make up the biggest portion of the S&P 500, have shown really strong earnings. Bank stocks, which is another big portion of the S&P 500, are also showing really strong earnings and revenues. Drug stocks are doing pretty good. In fact, the only thing that I see having trouble right now. Energy stocks are doing well, by the way, but they're just such a small part of the S&P 500. They're not going to move enough to move the needle. But consumer staples, these are like, consumer packaged goods companies. Procter and Gamble was down today. An okay earnings report, okay revenues, but they're really getting eaten alive by inflation. It's just the cost of plastic packaging. Plastic packaging is reliant on oil, and just the inflation is just really starting to hit these companies. When you look at like a software company, which is like what you'd say is Google or Facebook, their cost of creating product, it's almost like it's free when it comes to software. They will have employees to pay, but so do consumer packaged goods companies. But the profitability, the margins on technology companies are so high that even with inflation, I don't think anyone's really throwing these companies out the window. Now, interest rates today are above 1.6%. You could say that if interest rates are above 1.6%, that these companies should go down, because interest rate hikes or higher long-term rates would hurt high multiple companies, highly valued or high duration companies, because it makes when interest rates, long-term rates go higher, it makes their expected future earnings worth less in today's dollars. It's just how the math works. So these companies would go down. And they had a little bit of a scare about a month and a half ago, a month ago. We've gotten over that. And now people are thinking, well, if there really is there is inflation, but if it's persistent inflation as opposed to transient inflation, you're going to need technology companies to help lower your costs. Where are you going to advertise? You're going to advertise where it's cheapest and you get the best bang for the buck. There's Google, there's Facebook, and you could advertise in Amazon also and other places, but it's really Google. There's really two internets. There's the Google internet and there's the Facebook internet. Think of it that way. And then, so industrials so far are looking really good too. And if we do get that infrastructure package passed, that'll be another good thing for industrial and materials type stocks. So I see, for those reasons, investors could take those reasons for being bullish. The taper tantrum. There was no tantrum. It really wasn't. The Fed said they're going to slow down their bond buying every month. So they're going to do it. They'll probably start next month. We all know about it. Market goes higher. So I think the market is just so past that. I put out a picture of Don't Fear the Reaper, the album cover from Blue Oyster Cult, but instead I crossed out taper, and I crossed out Reaper and I put in taper. I thought it was so clever. Got like 1 hit on Facebook and like 5 on LinkedIn. I thought that was so good. What else? Really? Oh, COVID. COVID cases are on the retreat. And as long as COVID cases are on the retreat, it gets the economy reopening, and it's good for reopening stocks once again. So the other thing is that because the economic recovery started to surge earlier this year, then it went away because of a surge in COVID cases. What that really did is it had the what it really did is it caused the economic recovery from the pandemic to get stretched out into a longer period of time, which, if you think about it, is bullish for next year. Now I would be remiss if we didn't talk about, we're almost done here, if we didn't talk about, supply issues, global supply. So we're not just in an environment with more inflation because of a scarcity of products. We're in a scarcity environment. You go into a store, it's like they don't have a lot of stuff on the shelves. Everyone's warning you, do your holiday shopping now. Don't wait, because whatever you think you're going to get, it's probably going to be sold out. Although I was in Costco recently and they didn't look like they were sold out of anything, I'll tell you that. So I think these get resolved, but the supply issue, there's so many levels that this is on. There's not enough shipping containers. There are a ton of ships outside of LA and Long Beach, the biggest ports in the United States. So there are ships just floating around waiting to unload their goods so they could go back and get more stuff from China. There's a shortage of semiconductors, so it's creating a shortage of cars, a shortage of cameras, a shortage of toys, a shortage of everything. So that is another issue. There's a shortage of labor. It's hard to hire people. So there are shortages of a lot of things. I'm not calling people things. I'm just saying a lot of factors. Okay. So that is going to keep the economic expansion tamped down a little bit, but it could also help it to grow a little bit longer. And I think longer, persistent expansion or recovery is better than a rapid recovery and then a rapid stop. I hope that makes sense. So that's why I still think things are looking bullish from this vantage point. If you put those together, all those factors I talked about, I think the bullish ones in investors' eyes far outweighs the bearish ones. Well, maybe I shouldn't say far outweighs, but it does outweigh it. And I think you're seeing evidence of that. And the last thing, the last reason why I think the market could go higher is something called performance chasing. Now, if you take a look at the biggest stocks that are leading the way, like the Googles, the Microsofts, the Apples, and you are a money manager who has to, if you're a money manager who has to disclose your holdings and you want to make your year and you're behind your benchmark, whatever that may be, you're going to now put more money after good money. And you're going to buy more of the winning stocks to show people that you had it on the books, even if it was only for a day and after they were already up a lot. But that's also where they're, money managers are going to go for more performance. So for that market mechanics reason, performance chasing, or you could also call it window dressing, I think that's another reason why the stocks that are up this year could continue to go up. And the stocks that are down this year could continue to just languish until we turn the calendar. That's my story. I'm sticking with it. Thank you so much for joining me today. I'll be back tomorrow. And if you have any questions that you would like to ask, hit me up in the comments. I will definitely see those. And I'll see you tomorrow. Thank you very much.